Scott, what is going on, my friend?
Hey, good morning, brother. Good to be with you.
I'm excited about this podcast. I've been excited for a few weeks because we were supposed to do it last week. Things came up, but we're finally here. I just want to say thank you for all of you that are watching. I got a great guest for you guys today. One of my dearest friends, so actually one of my longest friends here
in Florida.
Yeah. I think when I moved here, it was it was December 31st, 31 days, right? In December, I don't know.
Yep.
30 or 31.
That's what the rhyme says.
31. That's right. I cut the knuckles and all that stuff. So when I moved here, I'm a guy that wants to jump to things right away. So we were here about a week, and I look at Julie. I said, Julie, we need to find church. We need to find church. We haven't even been to church yet. We're not even done unpacking. It was just like, I need to get my office open. I'm like, all this stuff's running through my head. And at the time, I don't know how many people know this, but since we go to the same church, when I was looking for churches online, Bayside was a mile from my house. Well, the kind of ironic story of that is I didn't know Bayside was here. However, I used to run Relate conferences back in the Northeast at my church, and I had met Pastor Randy in 2011, and I used to shadow him or his brother when they used to do these Relate conferences because I was in charge of the connection team there.
Yep.
So I would be like, okay, my team, we're going to shadow this pastor. So when I seen Bayside, I'm like, oh my word, that's a mile from my house.
Yeah.
I'm like, this is great. So I said, Julie, we're not going to marry this church because there's a lot of good churches here. Mm-hmm. And what happened, it hasn't happened since, is I walked out of the service. It was great service. It felt just like home at my church because they have the same DNA. And Pastor Randy was right outside the door, like with nobody.
Yeah.
So I started talking to him. Since then, I have not seen him without somebody outside the door.
That was 2011.
Right.
Yeah.
It was 2019. That's the crazy part. So it was busy. So I talked with him, and I still said, I think this is where we're going to go back. Mm-hmm. But let's see you next week. Well, Monday I will go to the gym, which we're going to lead up to where I met you.
Yeah.
I go to the gym to the Y. And my whole working out since I've been a kid was always with my friends, my best friends. And all the way, we all worked together, so we worked out. So I didn't really have a workout partner. At the Y, I was just going because I was into working out.
Yeah.
And guess who's there at 5:30 in the morning? Pastor Randy.
Yeah.
I was like, all right, God, that's the sign for me. This is where I'll go. But the following week, so this would have been the third week I was there in Florida, I went to church and they were doing groups.
Yeah.
And there was a little booth there with an F3 flag on it. And I said, what is this? It's a workout group? And at first I'm reading, I'm like, all right, they work out outside. Okay, I'm a weightlifter guy. You know, I like to lift weights. But I'm like, I'm going to check it out. So that Monday I went. And you were one of the first people I met, Bing or David Kelly, as the world knows him. Yeah. He actually made a point to pick me up every day.
Oh,
after
I love it.
That. He came to my house every single day, and he's like, "You're coming." So that's when we first met, and you were a leader. I mean, you're still a leader in F3, but you were one of the founding guys of F3, I think, at the time. I mean, for me, you guys had already been 2 years old, so you had a pretty good stamp there.
Yeah, we had kind of gotten established. It's kind of funny because I lived in the same neighborhood that you ended up moving into when you first got here. And that's also the same neighborhood that Bing, David Kelly, was living in. And I remember seeing a post on Nextdoor Neighbor, and it was just talking about, an open invitation for guys from the neighborhood to come together for a workout on a Saturday morning. And he had the date, and it was a couple weeks ahead. And I had been working out at the Y as well. I've been getting after it pretty good. In fact, Pastor Randy, and I used to do the spin class at the Y together, like 3 days a week for years. And that's a whole nother story. But I saw this post, and I'm like, this is literally what I thought to myself. Well, it's probably some mandy-pandy workout, but maybe I'll meet some cool guys from the neighborhood, right?
Yeah.
So I decide I'm going to go. And so Ethan, our son, who's now 19, I mean, I think then he was probably 12.
Yeah, okay.
I got him up and I said, "You're going with me." And so he and I went, and it was David and Recall.
Recall,
and and one other guy from the neighborhood who came that one time and never came again. And there were the 5 of us. And I just remember within about 5 minutes of the workout starting, right? You know what this workout's called, but I was doing a handstand up against a wall. And I remember thinking to myself, well, this isn't exactly Mandy Pandy.
Yeah. It was and I thought the same thing.
It was a beatdown.
It was a beatdown. And I was like, man, okay, this body weight stuff is legit, you know, doing these burpees and push-ups and, you know, you're getting probably a mile to 2 miles in.
A couple miles is typical, you know, for a workout. Yeah.
Which was amazing. But that's where we first met, and you were leading the groups. And I was always impressed with, I mean, you just have a gift. I call it gift the way you speak. Like, you know, you would, even if it was just saying a prayer or whatever it is, you just have an eloquent way of speaking. I don't have that same tone.
I gotta give all the credit to my mom.
Okay, all right.
She was an English major, and so I grew up, you know, with that as my environment, and so that rubbed off. That and music, I got that from her.
So nice, because you played a guitar.
Yeah,
you know,
just about every day. Love that, and been doing that since I was 12. But you know, F3, I'm very grateful for.
Absolutely.
You know, I just kind of, I saw that every guy needed something like that, and that was in those early days. And I had been going to Bayside for a while. I started going to Bayside in 2010. And so, you know, I knew a lot of people there. And Randy had been used to working out with me. And he started hearing about F3 after we'd been doing it for a while.
Yeah.
He came up to me one day and he's kind of like, what's this F3 all about? And, you know, I told him, you know, fitness, fellowship, and faith. And he was like, we need to make that a small group. And I'm like, all right, I'll make it a small group.
Yeah.
And I did. And so literally,
you started
I would stand there in my F3 shirt, and I would just look for guys. And if you made eye contact with me, I had you. The tractor beam was there, and I sucked you in, and that, you know, and I had that conversation. I'm just encourage guys. You know, I could tell the guys that, you know, either were working out by themselves, which we call an F3 sad clowns, or guys that needed to be doing a little something, and, you know, you'd see them with their families, and I'm thinking, this guy just needs to know about F3 and he'll take better care of himself. And it worked. I mean, there was just a ton of guys that got involved, and it just kind of exploded. And it was amazing to see what happened. And, you know, there's been a lot of great men who have stepped up to lead F3. And I was just kind of a small part of those early days. But it's special, you know, and I think there's like 40,000 guys nationally that are part of F3 and work out, you know, so F3nation.com, you know, if you're watching this, you know, F3nation.com, you can go on there. There's a little map. You can put your city in, no matter where you are in the country. It'll show you the nearest locations and the schedule, when to show up. And all you need to bring is something to drink and a sweat towel, and you're going to meet some great men. And at the end of the day, you know, the workout is kind of that's a Trojan horse, right? As we know.
Yeah.
It's truly a brotherhood.
That's right. The friends you made
special.
Some of my best friends down here are from F3.
Absolutely.
I mean, I built my community. It was built off of, you know, obviously the church, but a lot of the guys that go to the church that I hung out with went to F3. So I mean, and to this day, I mean, I don't do the daily workouts. I'm now with a group of guys that are in F3 that do triathlon trainings, but they're still, you know, we're from F3 and it's still F3, and we still run with some of those guys. So it's definitely was one where we first met. And then to fast forward, probably, I want to say I hadn't even been, maybe I was here for a year. And I had started, I was looking at different networking groups in the area. And the challenge with the one, it's 3 letters. I won't say it on here. I don't want to plug it.
They're IOU.
But that's right. And you know, for me in the mortgage industry, that's a really tough seat to get. And I know this because in the Northeast, I had started a couple chapters over my careers, because I started them. You know, I started in these networking groups in like 2002. So I knew the work that had to go into it. However, down here, I didn't have the same network of people. I just moved here up north. I was, you know, in business up there since 97. You know, I grew up there. I had a pretty big reach. So I started a standalone networking group up there, and it was very successful. Ran it very rigid, very not as rigid as some of the other ones, but rigid enough to where it lasted. It proved
structure.
The concept is still alive today. They have 30 or 40 members still going strong. They're doing great things. So I didn't really want to have to do all the work that goes into that stuff again, because I had done it so much. I knew what it took. So I put this little post up. I think it was on Facebook or whatever, and I said, I think I put an image of my group from up there and said, is anyone interested in starting a networking group with me? And I was thinking I wasn't going to get anybody to answer this call, right?
Nobody's going to bite on that.
No one's going to bite on it. And, you and Greg were again, two of my brothers from F3 were the two guys that said, listen, I'm in. I'm like, honestly, I was like, oh man, this means I got to really build this thing. And I was like, I knew what it was going to take.
I remember specifically, we were at a Halloween party.
That's right.
And we were over at Pincher's house.
That's it.
Everybody's in F3's got a nickname, so at Pincher's house.
Yeah.
And we're sitting at his dining room table, you, me, and Greg.
That's right.
And that was the first real kind of seedling conversation we had about that idea, and it just kind of went from there.
And it started, and that's where we came up. Well, we together collectively came up with a different and a better idea than what I even had. So, KBA, Kingdom Builders,
Kingdom Business Alliance.
I always say builders.
We used to just call it a KBA. Nobody ever.
We say KBA. I'm in Kingdom Business Alliance is over here. That's another group we're in. I mean, there's a lot of KBA. So with that, we decided to form a networking group that supported fellow Christian business leaders. Not necessarily had to be sales or whatever it is. It could be a self-employed person, a small business,
a key person
a fiduciary, financial planner, myself as a mortgage banker, real estate, all these different people that come together and grow something. And I think what we did was we created something really special in the sense that it's bigger than just us, because I know many of us that are in the group believe in the principle of tithing, and we know that we pass a good amount of business around in our group, that 10% of that income that's being derived out of that group is going to be going back to their local churches, which is awesome. And that's really where you and I get to spend more than just an hour in the morning killing each other on a workout on a pad of cement. And that's where our relationship started growing, and where I started using you as doing some of my investment planning, which having a trusted advisor is very important, especially, for me, even being new down here, right? It's like having someone you can trust to give your assets to and know that they're going to do the right thing with your money was very important. And I had just went through a very hard thing where I lost a big amount of money. I don't even want to say it on here, but it's embarrassing, if anything. But because you just don't know who to, so I'm being from the Northeast, you're a little bit untrusting anyways. Skeptical. Skeptical is a great word, and that was it was. And I never was skeptical because we had formed that relationship in the beginning. So that being said, I'm so happy that you're on this now. I mean, I know a lot of your story, but I think there's some of the things that you do, people that are watching should know what you do, especially local, especially if they're moving here, they're changing jobs, between the different things you can do with rolling over 401ks. A lot of people don't know what they're doing.
Sure.
And they can't, it's hard to communicate with someone from a whole other state all the time and manage their money. So what I'd like you to do is kind of start me to where you started in the business.
Sure.
Why you got in the business. Just share a little bit about your insights on what got you to where we are today.
Yeah, sure. Well, first of all, it's my privilege to serve you and Julia as your trusted advisor.
Thank you.
So, and likewise, I mean, Shelly and I are so grateful to the two of you for serving our mortgage needs, and not just us, but I mean, a lot of my clients.
You. Yeah, we appreciate
you guys have taken great care of through the years, and a lot of them, had very different situations, very different stories.
Yeah.
And every single one of them, you got them to win. And so you guys care a lot, and that shows in the work that you do. So, but I mean, when you think about your finances, right? You think about, how emotional that subject is. I mean, I'd probably say second to your health. Your finances are probably that biggest priority that you think about, you worry about, and you want to just make sure you're doing the right things, right?
Correct.
And when anyone asks me, kind of why I do what I do, I always tell a story. It's a story about a little 8-year-old boy, little blonde-haired, blue-eyed 8-year-old boy, happy-go-lucky, loved to fish, and had great little life. Little 6-year-old sister, loving parents who were both college-educated, devoted, responsible, and anyone who knew this family would say they had a beautiful life, and they truly did. Right up until Tuesday night, that little boy's father would leave for work that night, never to return home again. He would be lost tragically in an accident at work. And the next morning, the little boy's mother, 34 years old, would become and start life as a widow with 2 little kids. And even though those parents were college educated and responsible, they were woefully unprepared for that event. Yeah. And so painfully within months, the widow and her 2 children would be forced to move and relocate, leaving behind their neighbors and friends and starting all over again. And the little 8-year-old boy would struggle for the next 4 years with depression and instability. And it was a really, really rough road that they had to go through. And I share that story because I was that little 8-year-old boy. So my father was Lieutenant Commander Malcolm Wagner McKay. He was a fighter pilot for the United States Navy. He was lost in a tragic accident, just a routine training flight 3 miles out in the Gulf of Mexico off the coast of Naples. And he was lost, and we went through a very, very tough recovery. And, my mother, God rest her soul, she raised my sister and I and had to overcome a lot of adversity and challenges, but she did it. And I have so much to thank her for. I bet. But, God has used that chapter in my life to give me a burning desire to serve others and to make sure that they have all their ducks in a row. And, that's the unlikely scenario that somebody's going to, be lost in their 30s to a tragic accident. But, we want to make sure that things are in place in the event that does happen. Yeah. But, more than likely, you're going to have average life expectancy or maybe hopefully better. And you want to be able to make sure that all of your hopes, goals, dreams, priorities, that you have your resources in order, that you have everything organized. Yeah. And, I love being that resource to people to help them just make sure that they're doing the right things. And, I have a holistic approach to the services that I provide to my clients. It's really all-encompassing. So we do, work helping set goals and helping people prepare for their retirement, college education for their children, long-term care planning for older clients, estate planning, making sure that everything is registered appropriately and kind of checking all the boxes. And really more importantly is just, empowering people by creating order in their finances. Because, a lot of people, when we first start working with them, they've got a couple of old 401ks from old jobs that are floating around, and I'll try to find a statement, or I can't even remember where one is, that kind of stuff. And, they're not really able to monitor it because they're left here and there. Yeah, and so, to bring that under focus and under management where someone's got their eye on the ball to make sure that we're capitalizing on available opportunities and avoiding any unnecessary risks so that they're meeting their goals and their money's working as well as it can for them. Yep. We add a lot of value that way. But, really just being that voice that they can turn to when they've got difficult decisions to make. Yeah. And honestly, it's become so challenging today just because there's so much noise out there. Correct. I've been in practice since 95. And, the world has gotten a lot more, the pace has picked up a lot, and the amount of information is everywhere is exponentially greater. And unfortunately, most of what you're hearing out there is narrative. Yeah. Very little to do with the actual data. The truth and the data. There's agendas, and they are behind the narrative. And so people who are just trying to understand where am I at, what should I be doing, what should I expect from the economy and what's going on around me. It's very hard to understand because you've got somebody with a great credential who's on the channel on one side saying one thing. Somebody else who sounds like they should know what they're doing on the other side, telling you to do the other thing completely different. And you're in the middle going, what does this all mean for me and my family?
Yeah, and it's not a one size fits all.
No,
so it's not like you can see this on the TV or whatever you're listening to, or this podcast or this person. Just because it worked for this individual doesn't necessarily mean it fits your situation. I mean, even with when you came to us and sat down with us, I mean, another great thing is what you did. You looked at all of some of the other stuff that we did, and one of the things, we thought we had some good insurance, and you said that's good insurance. You don't want to touch that. Where some people would have probably could say, no, you want to get rid of that, do this and do that, and you're no, this policy is good. I mean, you probably want to update it at some point or do something with it, but right now you're in a good spot due to your age and whatnot, and that's important because, like you said, I think it took us about, I don't know, probably 3 weeks just to gather documentation because again. You don't know where this stuff is. You're not paying attention. What did I do with this? Where's this thing? Where's it? And your life is going on, right?
Oh yeah.
And to be able to have someone kind of with white gloves, kind of walk you through it because you're already going a million miles an hour. You're working. You got kids. You got this. You got that. You got this stuff that's, in my case, was still in boxes. From moving because it was a few years ago, right about after I moved my house. So I don't know where none of this stuff is, but you were gracious. And I think that's important. Because you got people in any industry that are pushy and this and that, and then you don't ever get anywhere.
Sure. Well, I think one of the important distinctions is that I serve as a fiduciary, and that's an important distinction. Only about less than 12% of advisors work as fiduciaries. Okay. And it's the highest legal standard in the industry. So we have a duty of loyalty and a duty of care. And I'll use a metaphor. I'm a car guy, so I'll use a car example. So let's say that a fiduciary is working at a Ford dealership selling cars, right? Okay. And a customer comes in, and it's a family, and they start explaining what they need. They need a bunch of seats, and they need certain things. And he quickly identifies that the best vehicle for them is probably a Toyota Highlander.
Okay.
A fiduciary is going to tell them the best solution for your situation is for you to buy a Toyota Highlander. Even though that means that they're going to walk down, to get in the car and drive over to the Toyota dealership, and he's not going to make a sale, the fiduciary's obligation is to put the client's best interest before any other consideration.
That's it.
Their compensation, the company they work for, anything else. Has to be about the client first.
Correct.
Someone who's not a fiduciary would think, or perhaps say to the client or the customer, hey, you should look at the Ford Explorer. It's got a lot of seats, a lot of room, and I think it'd do a pretty good job for you guys. I think it'd be a good fit. And that would be the standard of suitability.
Correct.
Which is what, kind of the rest of the industry, that's the standard that they're held to.
Yeah.
Is this standard of suitability. So they need a large SUV. He sells them a large SUV. Okay. Is it the best large SUV for them? No. But is it suitable? Yes, it is. Therefore, he's done nothing wrong in the eyes of that standard. So that's an important distinction.
It is. And I can tell you from experience. So when I was about, I must have been 2006. So I was probably right around 31 years old. And at that time, Julie and we had our mortgage bank. I had 4 offices. I owned the whole company. I had 80 bankers. I had a lot going on. It was a rat race. And we had my other buddies own mortgage companies as well. So me and my friends, we all grew up together. We all sold frozen food when we were teenagers. Yep. We all kind of did all this stuff together. Actually, one of my friends, and is actually driving down here right now, one of them. And there was a guy, slick guy, slick. We called him the Silver Fox. He was a trader. He, financial planner guy. But he must have seen all of us because we all come from middle to low class families. Mm-hmm. No one taught us, we knew that we had to put some money away. We knew that we needed to save. We see this flashy guy wearing the nice suits, and he kind of took all of us kids in a sense because we were, in our young, those guys were in their 20s. I just had turned 30. And this guy, he sucked us in. Mm-hmm. And we bought it hook, line, and sinker. And we all gave him, I think we each gave him like $100,000 down. Here's 100. Start working, and we're going to give you more money.
Yeah.
Well, every month we're getting our statements. We're not gaining anything, but this guy's buying new Escalades, and he's getting paid per trade.
Oh yeah.
So we don't know. Like all we know is that this guy's going to make us money on our money, right? And he's thinking, I'm getting paid on every trade I make for these guys, and we weren't making any money. So fortunately, I got out of there without getting skinned alive.
Yeah.
One of my buddies got skinned alive. I took the money out. I didn't lose. I maybe even had a little bit ahead, but I'm like, this isn't right. And that's when I really started diving in. Like, okay, I need to educate myself to figure out what vehicle, who am I going to put my money with? Because now I know I just literally could have got killed with this guy. And and like for you, there's a set fee. This is what we make on your earnings. That makes. I want you to kind of talk a little bit about that so people understand the differences. Because if you pick the wrong team, you're gonna lose at the end of the day.
Yeah.
And not just lose money up front, but the money that you will lose over time that you're not getting the compounding effect from by picking the right person to work with is going to make a major impact when you're in your 60s. Now, when I was 25, 30, I wasn't really thinking about when I was 65, but now at 49,
you got your eye on the prize.
65 isn't that far away, right? So it's like, okay, that's not that far away.
Sure.
And then 65, that's nothing.
No.
I still got another 30 years. I mean, I'm not going to retire at 65, but that's just, that's the mark where people say, oh, so you're going to be done at 65. I don't see that, not because I don't have to not work. I just would hate not being of value in some way to society.
You want to contribute.
Correct. I feel like there's so many times you hear about that guy that worked in the mill till he was 65. He worked 50 hours a week. He finally retires at 65 or 60, whatever that age is, and then you find out the guy dies in a year.
Yeah.
Because he didn't do anything I think it's because you don't do anything of value, not using your head, your brain.
I think it's
all
because they lose their purpose.
The purpose, exactly. That's the best way to put it.
Purpose, they lose the reason why they're alive, and they literally their body just shuts down.
There's no purpose at golf every day. I mean, I don't think.
Yeah, you want to live within. We talk about it all the time in KBA, right? Living with an impact and having a purpose. And when you're operating in your purpose, using your God-given gifts to serve others,
you thrive.
And you're glorifying Him, and you're prospering others.
That's it.
It's a win, and it's just so fulfilling. And I'm like you. I don't see 65 means nothing to me.
No.
My goal is to take care of myself and take care of others. Be healthy and be able to serve with excellence.
Doing it because you want to do it, not because you need to get the money to do it, but you're doing something to be productive. But let's circle back because I kind of went off on a rant.
All good. No, we want to talk about the different ways that people who do what I do get paid.
Exactly.
And what your viewers might want to understand about and be looking out for.
Very important.
Yeah. No, that's a good point.
Yeah.
So I mean, no one does what they do for free for very long, right? So everyone has to get paid somehow or some way. And so my encouragement to the viewers would be to look for and work with someone who is fee-based. So what that does is it aligns the interests of the advisor and the clients because they're paid based on assets under management. They're paid a fee, and that's fully disclosed. It's upfront. You understand exactly what the services are costing you, and versus like someone who's working for commission. Someone who's working for commission, you likely don't understand what
that commission is.
That commission is. It's oftentimes buried inside of the product. There are internal hidden fees, and one of the responsibilities I have as a fiduciary is the obligation of transparency and full disclosure. And so to make sure, if there is any type of a fee inside of a investment vehicle, that the client understands what that is. And so that they understand all the different pieces of that cost equation and they know exactly what they're paying and exactly what they're getting. But really important is when you're a fee-based advisor, you have really two ways that you can earn a pay raise, right? If you give me a lump sum of money to work with and I grow that, right? Now we have more money, your account value has gone up, you're feeling pretty good.
You win, I win.
Right? So you're happy and I've earned a pay raise because now I have a bigger pool of money to manage for you. So we've both won.
Yes.
Conversely, if the choices don't work out very well, your account value goes down.
I lost.
You're going to not feel so good about that. And I've earned myself a pay cut. So
Correct.
we both feel the same thing.
You feel it on both sides.
Alignment of interest is really important, and that removes a lot of the potential for a conflict of interest. And then the second way that you can earn a pay raise, as I like to talk about it, is if I've taken good care of you, served you well, and you're really pleased with the results, naturally you're going to be inclined to introduce me to people you care about that would need help, maybe have moved into the area,
correct,
don't know anyone that they can help them with those things, and you say, hey, you should have a conversation with my buddy Scott. He helps Julie and I, and I've earned that opportunity to meet them and introduce myself, correct, and see if we're a fit. And so, it's a really nice way to work because it's ethical. It's the most ethical way to receive your compensation, and it's the most transparent because you literally see on your statement exactly what that fee is.
Correct.
And you have no questions about it. There's no mystery to it.
Can you walk us through like some of the different, I'm using the word services, but maybe it's products that you focus in so people can, because again, it's easy to say, 401k rollover or insurance, but what are some of those some of these vehicles that people can plug into that's kind of your will? I know you're encompassing everything, but maybe the main force. So people that are coming down here, they might not be thinking about, he could help me with that, or he could help me with this.
Sure.
So that way we have a really good, clear outline of some of the key things that you do and what people want to realize, whether it's a whole life in policy or some of the other things that you do.
So as an independent financial advisor, I have an open architecture platform, which simply means I always use the analogy. So remember when you were a little kid and you had they give you a new box of crayons, you had 8 colors, you had red, yellow, blue, green, orange, and so forth, and you'd color with those. Well, I have the big 128 box one with a sharpener in the side. As an independent financial planner, I have open access to all the products. And so the beauty of it is it really depends on the client and what they're needing to accomplish and what their risk tolerance is and what is truly the best fit for them. Okay. And so we start with the client and their needs, and when we build around that. So, if we've got a client who's coming into the area and let's say they're in their late 30s, early 40s, and, they have good earned income and they're looking for, usually they're looking to minimize their taxes. And so, if they're a business owner, there's so many things we can do. I have tools that we can, literally take their tax return, the most recent one they filed. We can use that tool to analyze their tax return, and then we can run all kinds of mock scenarios. So, like, let's say that they own a business and it's an S corp. We can play around with, what if you took this much income as W-2 salary and you took the rest as distributions, owner's distributions? Yeah. Or what if you set up a simplified employee pension plan for your business and you started funding that, which for 2024, you can save up to $69,000 per Social Security number. So if you have a husband and wife home business, it's a really powerful tool. And every dollar that you put into that plan is pre-tax. So it reduces your taxable income dollar for dollar. And then, we've talked about like health savings accounts. Those are, low-hanging fruit. That's a great write-off. I mean, up to $8,300 this year for a family. And in about 3 minutes, I can let you know if you are eligible for an HSA. So that's really simple. When it comes to investments, again, it really comes down to building a plan and a portfolio that's going to work well and serve well in all kinds of markets, because we know the market goes up and the market goes down.
Balanced portfolio.
You've got to have some risk that's going to work well when the market's going up and if the market's going down, so that over time you're accumulating wealth. And that's really what it's all about.
Let me ask you this. Yeah. This is another thing that I think people are confused with is, let's talk about, if I had to guess, if I put something in pre-tax today and I pay the taxes on that money and I don't have to pay taxes on it later, I would think that that's going to be worth a lot more to me now than doing something that's going to be taxed later, because I believe taxes are going to go up over the years, right? Now, you could tell me I'm wrong, but there's different IRAs. Like that's a simple low hanging fruit for anybody. Should be maximizing their IRAs. But you got your Roth IRA and you got your regular IRA. Why don't you kind of talk about what you think? And I know it's different for everyone's situation is different. But say you got a 30-year-old who's making a couple $100,000 or $100,000 a year or $80,000 a year, and I know the max. What is the max each person can put in right now?
$7,000.
So $7,000.
Yeah, if you're under age 50, and if you're 50 and up, which you'll be soon, then you get to put an extra $1,000 as a catch-up contribution. So $8,000.
Okay.
Yeah.
And you can do those pre-tax.
You can do them pre-tax or after-tax.
After-tax.
Yeah, so if you're doing a traditional IRA contribution, that's a pre-tax contribution. That's the same as like a simplified employee pension like we talked about, same as a 401k at your job if you do that. It's basically reducing your salary, reducing your taxable income, and you're putting that into that retirement account. And there are restrictions on it. You're not supposed to touch that money before age 59 and a half. If you do, there are a couple exceptions, but if you do without meeting one of those exceptions, there's a 10% excise penalty tax that you pay, and then of course you're going to be expected to pay ordinary income tax on those dollars because you never did. So that's the pre-tax, and that is traditional. Compare that to the Roth.
Yes.
Roth is after tax. So you think about, I earned the money, I gave Uncle Sam his piece, now I'm taking this $7,000 or $8,000, I'm putting it into that retirement account, and now we're growing it. And if you think about the most valuable dollars you can have when you're retired, it's money that you never have to pay any tax on.
Exactly.
You could put that $7,000 or $8,000 in your 30s, and let's say it's worth $100,000 when you retire. You can pull that whole $100,000 out, and Uncle Sam gets zero
because you've already paid the tax. That's what I would. I think kids, not kids. I'm saying kids, but these young adults right now. If I was there. And even now, the Roth IRA is the best. I think taxes will be higher in the next 20, 30 years. If I'm a betting man, I'd rather have paid Uncle Sam his now and just reap all the benefits now. And these are the things that I think that people can get a lot out of when you're sitting across the table from, because then you're give me an example if there would be a reason for someone to do a traditional. Is there?
Yeah. So if you're making over $390,000 as a married couple today, you're in at least the 32% tax bracket.
That's okay. You're in a higher tax bracket.
So if you're a few years, maybe 10 years or less from retirement, and when you retire, let's say you plan on living on $10,000 a month, right? So you're actually going to go into a much lower tax bracket once you retire. So while you have this high taxable earned income, reducing that, you're reducing it at that highest marginal rate. So you're literally saving 32 cents on the dollar of taxes by putting those dollars into either a 401k or an IRA, traditional IRA, or a SEP, something like that. That's a pre-tax retirement contribution. So there's a lot of value in that, especially if you can see that I'm going to be in a significantly lower bracket. Maybe I'm, paying 20 cents on the dollar or something when I retire. I'd rather do that. And so that makes sense for them. With Roth, there's also income limitations. So if you make more than a certain amount, you're not eligible to contribute to a Roth. But the good news is an investment advisor or a financial advisor worth their salt knows that there are strategies, even for highly compensated people. It's called a backdoor Roth IRA.
There's a backdoor way to everything.
You can get dollars into Roth accounts, even though their income exceeds that threshold. So if you want to have that tax-free pool of retirement savings, we can definitely create that for you. If you want to maximize your tax savings, again, that's where we use those tax analysis tools, and we can tell you without any question what the benefit is going to be going one versus the other, and then you can see clearly, okay, we should definitely be funding a Roth, or we should definitely be participating in the pre-tax because we're getting more benefit from that.
More benefit. And I think it's important for people to kind of understand, at least on a high level, what that means. They're not going to know it. I mean, maybe they can learn it on Google, but really talking to someone like you and sitting down with somebody that can really walk them through not just here it is, but why? Why? Giving them the why to the questions and exactly this is why you want to do it this way, because this or not.
Well, there's so much content out there around finances, personal finances, and some of that's very helpful. unfortunately, it can also be like, what's WebMD, right?
Oh, yeah.
When you wake up and you're not feeling so well and you go on WebMD and you start putting in your symptoms.
Open up in the camera. Yeah, okay.
Next thing you know, you think you've got all kinds of serious conditions and really it's nothing, but you misdiagnosed yourself because they didn't have all the information about your specific situation.
Yeah.
And that can happen a lot to people, which is why, finding a trusted advisor that lives in your community that you can have a trusted relationship with and share all the details about who you are,
everything,
what's important to you, where you're at. Really, they get the whole picture.
The whole picture on it.
And then they can tailor recommendations and strategies specifically for you. And that makes all the difference in the world. There's no one size fits all when it comes to that.
Correct. So one of the things I want to kind of talk about is what you see as far as the market dynamics, as far as being here. Where we are is a little bit different than most of the rest of the country. I mean, I think it's 1,200 and let's just say 1,250 people a day are moving here to Florida.
Yeah.
And we just heard news from a good friend of ours that the second highest county in this state is Manatee County here.
Right here.
With everyone moving in.
Yeah.
How do you see what you do with the market is going to affect our area with real estate in a sense? Mm-hmm. Or how does that tie together with the planning that you do? Because I'm a property investor. We own multiple properties. And how does that marriage work together with what your planning does with that other side of it? Yeah, no, it's a great question. So real estate is a very important asset class. And, and when we look with a holistic, approach to financial planning, of course, we need to include, real assets in that. And when one that comes to mind right off the bat is real estate. Mm-hmm. And there's so many advantages to investing in real estate. You think about the tax advantages that are available, whether it's, your own primary residence. If you live there for 2 years out of 5 and you're married, you can exempt up to $500,000 of profit in your home if you sell it and not pay any capital gains tax on that. That's a gimme. Gift.
That's a gift. It is. And if you're single, it's $250,000.
Okay.
That's a powerful tool for people to compound tax preferred wealth.
Okay.
That's great. But like you enjoy, investors in real estate, there's a whole nother host of benefits to that. And you think about real assets, those are tangible assets versus financial assets, which are kind of, you think of like stocks, bonds, things like that are, paper assets, you might call them.
Correct.
So think of 2 different examples of tangible assets. That would be real estate and let's say gold, right?
Okay.
You can knock on
Physical,
them. They're there. You can see them. You can touch them. You can, feel them. So, gold has often been referred to as a, great store value. Some people say it's a great inflation hedge, all these things that they love about it. The one thing you can never do with gold is create an income stream. If you've got a block of gold sitting on the table, unless you come in there with a file every month and you file some off and you take that and you go sell it, right? And you drop it off, they weigh it and give you a check. There's no way to create income from that. And obviously if you were doing that, that's shrinking every month.
Correct.
A house though, if you have a tenant in that house, you've got cash flow, let's say you use leverage to buy that property, they're paying the mortgage for you, chances are, and if you've done it well, you've got a positive, return on that above and beyond. Yeah. And, all the while, you're getting an income stream and over time, the property value is going up over time.
Yeah, absolutely.
And so it's a twofold win. And there's a lot of advantages to that. And then you've got, your depreciation and, depending on your situation, we can talk about, accelerated depreciation and, based on your other income and things you're trying to offset. So there's a lot of great tools that
helps you with what you're doing.
Oh, absolutely. If someone is a business owner, there's a lot.
Well, I think you made a great point on these rental properties. One of the things that I've been reading is I think it's BlackRock and some of these big hedge funds, they're buying thousands of properties.
Oh, yeah.
And they did a really good job. BlackRock specifically bought a ton of properties. I was renting from them with, I forget the name of the rental company that when I first moved here, they owned, I don't know how many houses they own in just Greenbrook and Summerfield, but they own most of those houses that they bought when people foreclosed back in 2009 or 10. They just bought up all these properties and they They own it, and now they're still buying a lot of properties. What does that tell you?
I mean, BlackRock has some of the smartest minds in the business.
Correct.
And if they see the opportunity, they know that the cap rates are favorable and it's a good return on capital.
Yeah.
Basically, if you become an investor in residential real estate, you're investing alongside some of the best minds in the business.
What they're doing.
That's it's kind of proof of concept, right?
Yeah, and then you put together some other stats that you looked up that I'd love to have you share with it as far as the real estate is concerned. If you want to kind of
you want to go big picture national. You want me to go more local. You want a little bit of each.
I would like maybe a broad stroke of the national, but just because we do business in all 50 states.
Sure.
And then kind of narrow down for a lot of the people that are watching here for us are right here in the Southwest Florida market.
Yeah,
so that would be
we'll start big and then we'll zero in kind of on paradise here on the Suncoast of Florida. Okay. So, I mean, when we think national, there was a housing report that just came out. It's the February report, and it was released earlier this week. And so completions were up 19.7% versus 1 year ago. That's the best number we've had in completions since 2007.
Wow!
So that's a big number. This was pretty much a blowout housing report. Single family starts were up 35.2% over last year. It's a big increase. We're still not where we were in the peak. The peak was April of 2022.
Okay.
We're still about 15% below that, but we're making up ground quickly. And this is really key. Home builder sentiment. They do a survey of all the home builders on a monthly basis and ask them, what's your outlook? Is it favorable or is it kind of you're concerned? Yeah. And anytime that number is below 50, it means that they're pretty concerned about market conditions. They're not feeling real rosy about the outlook. Anytime it's 50 or above, it means that they have a more optimistic view. And in the last 4 months, it's improved consistently.
Okay.
And we're now above 50.
Wow.
And so more home builders are thinking that conditions are favorable versus those that are concerned. And so that's a nice shift that we're seeing. And I think that's definitely supported. I mean, if you think about what's driving demand for housing, right? There's a couple of things going on. So you've got, so many existing homes.
Yes.
We're financed with like
2.5%, 3%. I mean, they're not selling them.
Those once in a lifetime numbers that we probably won't see again, right?
Probably.
You couldn't get those homes from those people with a crowbar. They're not letting.
They're going to rent them.
They won't sell them. That's the advice I'm giving to my clients. If they have one of those properties,
rent it
with a 3% note on it. Either live in it, or if you don't want to live in it, you can't live it anymore, rent it out and get something else that's where you need it to be or what you need it to be.
Which keeps property values high because there's no supply.
Inventory is constrained and demand is strong, especially here in Florida.
Yeah.
The 1,200 plus people a day coming here, and every one of them needs a place to live, right?
That's it.
And so if you live here, you're feeling pretty good. And so, let's kind of, just to wrap up the national, one of the other things I want to make clear is, we're seeing a real disparity between single-family housing and multi-family housing. Single-family, the numbers have been very good. New permits up 29.5% for single-family homes. Multi-family homes actually dropped 29%. And permits is really important data point. It's the leading edge of what's happening in real estate
right now.
That's, they're filing those permits. That's what they're planning to build in the future.
Correct.
That's kind of what I call the canary in the coal mine. When you want to take the temperature of what to expect, we look at permits. That's really important. Prices are up from the first quarter of 2020, and this is national, to where they are today, up 37%.
Still,
37%. Even with everything we've gone through,
that's it.
37% from first quarter of 2020 to here we are, first quarter of 2024.
Which just a spin on that this just shows that we're nothing. This market is nothing like 07, 08, where people were upside down in their homes. The average person has 30% equity in their home right now.
Very different. And if you wind the clock back, we had this ramping up of prices, but people had a very different mentality about it. They kind of assumed it was never going to end, and so they were literally using their homes as an ATM. And they'd see their house price go up 50 grand in 1 year, and they would suck out
that money right
50
out of
grand, and they'd buy a new car or go on a vacation, big screen TV, whatever. They'd find something to do with that money because they thought, no big deal, I'll just it'll go up again next year and we'll do it again, and they just were living that way. And it worked out great until it didn't.
Until that
music stopped and there were no chairs to go around, and we all know what happened with that. No, today structurally is very, very different. Consumer balance sheets are much healthier today than they were back in 05, 06, kind of leading up to that big correction. Plus the lending standards.
They qualify for the mortgage.
The lending standard. They had what were called ninja loans back in the day, right? Back then it was no income, no job, approved, right? You never had to establish that you could actually repay that loan. Correct. They were just all too happy to provide you the money.
At 100%.
And you know why? Because they were taking those loans, they were bundling them
all the teachers,
and they were reselling them as mortgage-backed securities.
Correct.
And so nobody was actually holding that paper that was doing the underwriting. They didn't care about it. That has all been addressed. And as you know, the underwriting standards are much more stringent today than they were then. We have a completely different playing field.
You got to qualify.
So you've got to actually be able to qualify and prove that you should own the property, that you should be given the loan, and you will pay back that loan.
Correct.
So that's a different universe we're living in today.
Which is
thankfully, it's a much healthier market that we're working in and living in. So drilling down into local real estate. So February sales were up 9% locally over where they were in February of last year. That's pretty healthy.
Great.
And that's, even
we're
with
seeing it too.
We've seen,
We're seeing it in our uptick in applications.
Nice. So days to contract are now 57 average days to contract versus 39 a year ago.
Okay.
So it's taking a bit longer. I'd say, just to kind of give the overarching theme, it's a more balanced market. A year to 2 years ago, man, it was a seller's market. They were playing they had you and they knew it.
Yeah,
you had auctions bidding for lots and things like that with the builders.
Wave appraisals, wave home inspections. People
were buying things sight unseen. It was madness. We have a much healthier, more balanced market.
I like that.
And 57 days allows more time for healthy negotiations to come about, and you're getting more parity in the negotiations, and so it's a healthier transaction, I would say. What else? There's a 52% increase in active listings in our market versus a year ago. Yeah, that's very strong, and that's because I think there's more new homes available.
Correct.
Again, we already talked about kind of the lockup with the mortgages for the existing homes. I think there's just a lot more options available to a home buyer.
And I think people are waiting too. People are waiting for these rates to drop. You got a lot of people that have been sitting on the fence, and I'm like, now's your time. This is the time to take it.
Well, the Fed has, all but promised us they're going to cut rates three times this year.
They left it where it was last. Yesterday,
I think that's going to probably begin in July.
Correct.
That's what we're expecting. The jobs data have been a bit stronger than people really expected.
Yeah.
I could get into the weeds with that and kind of pick holes in that, but
that might be our next podcast.
Yeah, it'll be another podcast. But the headline jobs numbers, I would say, have been stronger than expected, and that's created sticky inflation, which has pushed out those rate cuts. The Fed does not want to cut rates too soon.
No.
They did that back in the 1970s, and unfortunately, we ended up with this rebound of inflation that is legendary. It's where we had 15, 16% mortgage rates and CD rates, and it was because we had rampant inflation. So they really want to be careful and measured in that. And I think Jerome Powell, the chairman of the Fed, has been very outspoken about that. He's very cognizant of that. So I think that I pray and I hope they're going to be very measured in when they do start and how often they cut rates, because we don't want them, as much as we hate high rates now, the last thing we want is for them to ease policy too quickly and we have that rebound a couple years later, because it'll be much worse than it ever was.
Yeah,
that's the last thing we want. So we want them to take their time. We'll kind of work through this together and make our way there. But I think it's realistic to expect, kind of June, July, the first rate cut. That's what a lot of people are talking about. The data supports that. And I think, 2 or 3 quarter-point rate cuts from the Fed in 2024. And the outlook is another 3 in 2025. So, won't go down as fast as it came up. They were ratcheting up at 3/4 a point hike.
Oh yeah,
every
never
time.
seen anything like that.
It was just boom, boom, boom. They nailed us real quick, and they had to, because they waited too long to start it. And so they had to play catch up.
Yep.
And that's how they made up for that
they
loss.
caught up. But I'm ready. I'm ready for it to slowly go down, however it goes down.
Yeah.
It doesn't matter.
Yeah. So I just want to, a couple more things we'll talk about. The Realtor.com median list price in our market is $280 a square foot. And the average home price list is $504,000. And the average selling price, the median selling price, $460,000.
Okay.
So
list, is that Bradenton or all Manatee County?
That is Manatee County.
Okay,
yeah. And Sarasota single family sales were up 11% over the last year. Pricing was up 2.5%. So even with the weakness we've seen because of interest rates and all that, we're still seeing increases in our market.
Correct.
So, and I think, you throw out the number. I mean, every time there's a 1% drop in interest rates in the market and mortgage rates, what does that mean? Who enters the market?
A million more buyers coming in.
A million more buyers. That means more competition, more people chasing anything that's for sale. What does that do to prices?
They're going to go up.
They got to go up. That's economics 101.
If you go up 5% on that $500,000 house, you just lost $25,000 to save $200 a month. I say, do you want $2,500 more in year one, and you're going to refinance, or do you want to lose $25,000?
Yeah,
to wait. So it's kind of just a way to look at it. People can see it that way, and be like, okay, that makes sense, but they're watching TV and they're watching the other news, and they think that this thing is going to happen to where, the rates are going to crash back down to numbers that they're not going to.
Yeah.
And it's
definitely not here.
No.
Not here. There's too much demand. Too many people want to live here. They want this lifestyle. The Gulf Coast of Florida is paradise.
It's a Gold Coast.
And they figured it out. And people can work from just about anywhere now with,
why would you work
remote
here?
employment. Why would you stay in Detroit, Michigan, or fill in the blank? Some other place. Nothing against Detroit. We love our autos and we love those good, hardworking people. But if you could be on the beach every weekend, toes in the sand, and have your friends come visit you here, and you could call this home, why wouldn't
make
you think
the same
about
money?
Doing that?
It's no brainer.
Yeah.
So Scott, why don't you to wrap this up? I want you to just tell people that are watching how they can get a hold of you.
Sure.
Just because I think it's important, especially for the new people. We're sending it out to all our clients.
Sure.
All our past clients, our database. So they're watching this and they might want to be like, what, I'd love to talk to Scott.
Yeah, I'd be happy to have a conversation.
Yeah.
To just find out what their needs are and see if we might be a fit.
Yeah.
You can go to KWA, like Kilo Whiskey Alpha, KWA Wealth.com. And there's a scheduler on there. You can set a time if you'd like to have that conversation. You can just call me, 941-567-1656. And just let's have a conversation. Let's start there. I'd love to hear a little bit about what you're trying to figure out, and we can talk a little bit more detail about that. And if it makes sense for us to sit down, then we can go ahead and take care of that.
That's awesome.
Yeah.
Well, thank you.
Yeah.
Everybody, thanks for coming in. Thank you for coming in. Thanks for watching. If you're out there and you have something interesting to talk about, please reach out to me. Love to talk about possibly coming out here, being on the podcast. It'd be great. And Scott, thank you so much for coming out. It's always a pleasure.
Yeah.
And can't wait to do it again.
I was going to say, we'll definitely do it again. We got a lot more we can get into.
Awesome. Thank you.
Yeah.
Cut. Nice.
All right.
That was good. So other
than my coffin fit. Hey, man, you survived it. It's coffin fit.
My coffin fit there, man. I couldn't catch myself. That was crazy. I think that went great, Scott.
Well, good.